Journal entries are key activity that we perform in day-to-day, business activities or fund business activities, I would say. If you join any fund accounting business, any means any, even if it is, let's say, mutual fund, hedge fund, or private equities, or any other fund of fund business, your core and main job would be to post journal entries in the books of accounts for differences and make sure that your accounting records are in line with the brokers, custodians, or any external counterparts accounts if you are maintaining as investment books of record. So why this is important? Just let me quick brief about it. As a AMC, asset management companies, they are mandated to maintain their EBOR. EBOR, it means accounting books of record, and the custodians, brokers, or any investment institutions, if they're helping you, means as a AMC, to manage your funds and everything, so they'll maintain IBOR, investment books of record. And as an AMC, you should always try to tie or match your records with IBOR. All right. And ABOR, basically accounting books of records, they always maintain their accruals as well as cash accounting as well. But IBOR companies, basically custodians or banks, they maintain their net to net accounting. It means investment books of record, they maintain it. And we always cross verify with the investment books of record. Now, again, question would be like, so why we, ensure that matching or let's say reconciliations with IBOR? The reason is every fund admin open broker and custodian accounts. And that's what you should always cross verify with those accounts. All right, so let's start with the discussion. So in this session, I'll cover the hedge fund accounting entries, how hedge fund accounting entries that we, post in the books of accounts. So I have created different scenarios, so through which I'll explain. So be there and attend it. Thank you. So let's start. So subscription, as you know that subscription is the first activity that we perform in the books of fund, because subscription is nothing but subscription. It means investors invest money in funds by subscribing units. Basically, investors will subscribe units and process funds to us. It's like an IPO event. In IPO event, what happened? Shareholders, they participate to buy the shares. All right, and once they participate in IPO by the event, so it means fund will receive to the company, and company will invest that funds in their operating activities, and in exchange of funds, company will process securities to your accounts. So you will receive securities basically. So same logic you can apply it in your account, in your fund business as well. When investor invest, so basically investors subscribe units, and we receive, means as a fund company, we receive fund. And once you receive fund, so your first activity would be, which is subscription. So you need to record subscriptions in the books of account. So how you can record subscription? Let's discuss that. Let's say you have two books of accounts. One is Geneva, another one is custodian. Custodian, basically, as I said, it's a bank statement. All right. So in the books of Geneva, you can record accruals as well. Let's say you have a due date of you have a due date of subscription, but there is no confirmation you have received on a bank statement stating your fund. So how you can record it? So you can check the due date of subscription, and even also you can refer the transfer agency report as well. If you get a confirmation on like when you're going to receive funds, then you can create receivables. And once you have, I'm assuming that you have a confirmation, then you can create the subscription receivables on due date of fund. Subscription receivable account debit to share capital account. This entry you can post and update your accounting records. So same receivables. Let's say that same receivables settled in bank account. Settled in bank account, it means what exactly? You will receive incoming wire basically. So that incoming wire you can tie with your cash deposit or subscription receivables. So once you match this, basically you have fund versus capital account. Fund you have received versus your share capital. So receivables you can remove it, and your accounting entry would be cash and bank. See, whenever you receive something, always we record that to the debit side, and cash is the part of assets. Asset we always record a debit if that assets increases or receiving to you. So here we are going to receive cash. So recorded cash account debit to subscription receivable account credit. So anyways, you can remove the subscription. So this is how you can record the first entry in the books of account. All right. So I have also taken two different examples. What if we have received less amount, or what if we have received higher amount, means over subscription. So let's say same example, the amount was due, subscription receivable account debit to share capital account. And in this case, in second example, the amount was 10,000. But when actually amount settled in bank account, we have a different scenario. Cash account, cash and bank account debit, which is 1200. The reason is you have an incoming wire of 1200. So your accounting entry would be cash and bank account debit to 12,000 basically. And then other subscription you have is, which is 10,000, subscription receivable account credit. Right. Anyways, we are going to reverse that subscriptions. That would be 10,000. And whatever amount that you have received as an advance, means excess. So that amount you can update in as an advance. So cash in advance account payable. So this is the case of over subscription. Over subscription. Now your question would be like, so why we update over subscription as an advances? See, you cannot utilize money if you have received extra, because that is not your own money, or that is not money which you have requested, and that's what you should record that as a payable. Because might be custodian can send the reversal notice very next day or maybe next week, so that fund will reverse it out automatically. So this is just a case where you have received excess amount, so you can transfer that amount to the cash in advance or payable account, because investor might request for a reversal. This is how you can record the entry in case of over subscription. What about next? Next is for under subscription. Let's see how we can record it. In case of under subscription, you can record the accounting entry. See, first entry would be remain same. On due date, your accounting entry would be subscription receivable account debit to share capital account credit, same amount, 10,000, 10,000. But when you actually received payment, that receivable payment in bank account, let's say you have received less amount, which is 9,000. So 1,000 amount you have received less. So your accounting entry would be cash account debit to cash account debit, subscription receivable account debit, again to subscription receivable account credit. Again, why we have recorded subscription account debit? See, remaining balance you can record it to the subscription receivable, but here see, communication and everything will have to maintain it separately. So as a fund manager, they'll communicate with investor and ask whether that investor is going to pay this amount or not. If the investor is going to pay that amount, then you can record it as a subscription receivable. If not, you can remove that and convert it, and you can remove that that receivable as well. So you can reverse it out and reduce your capital. So there are ways, but anyways, this is just one example. So you might see other different examples as well. But if you see again the amount is pending to receive, then you can record it to the debit side, which is subscription receivable, and you can prepare combine entry, which is cash account debit 9,000, subscription account subscription receivable account debit 1,000, and subscription receivable account credit, which is this one, 10,000. So this is how you can record accounting entries in the context of subscription. All right. So how this subscription works? Just quickly see this. You have a commitment. It means funding period, basically funding utilization period. In case of funding utilization period, what happened? Let's say investor confirm it 1 lakh amount. So in every stage or every quarter, investor will they'll subscribe units in the fund, in the hedge fund. So they'll continuously subscribe it. So once they subscribe, so you will receive subscription amount continuously. You will receive subscription amount, and you can allocate units. You can allocate units to whom? You can allocate units to investors. So let's create a units and assign that units. Let's say 1 rupees price for 1 unit. So you can continuously allocate units like this. All right, because total units that you have, I'm assuming 1 lakh units for 1 lakh capital, and you can withdraw that capital or ask investors to invest. And once you receive capital, your accounting entry, as we have processed above as well, cash account debit to basically once you received, so you can directly record subscription not receivables, share capital, or subscription capital or share capital. So once you received amount, you can directly record it as a cash and bank account debit to share capital account. If you see any due amount, then only you can create receivables. All right. And same amount, once the investor send request for a redemption, right? So it means it's a repayment of capital basically. Repayment of capital, income, gain, whatever that you have, you can repay it as well. So in that case, you can use wording like distribution or redemption. So redemption would be the appropriate word in hedge fund. So you can use redemption word and repay that amount, investors amount, whatever amounts that you have repaid. So once you repaid at that time, your cash will be credited because cash will be out from the fund account. All right. So this is how fund manager you manage funds. So fund manager received basically commitment. It means fund received through their private placements. Fund manager picked up that, utilize that amount, invest in different financial instruments. Then yeah, and then multiply the money also. So this is how, but this structure you can perfectly apply for a private equity, but same accounting entries and everything, it remains same in any business. All right. So this you can apply it in your hedge fund accounting business. All right. And same you can apply it even in mutual fund as well. So see, for a mutual fund also, for mutual fund and hedge fund, this accounting entries helps a lot. So you can apply it if you are looking for a hedge fund interview or even private equity accounting interview. You can refer this module. That will help you to prepare all your accounting entries. And if you want to become a pro in accounting entries, I would say daily you can prepare, practice it out. If you do practice more, then you can learn more. This is how you can enhance your knowledge. So I'm done with the subscription module. So quickly we'll go through the other modules as well. All right. So if I'll share this Excel sheet also, so you can practice it out, and you can share me that back as well, up to, means with your